Did you know the reason why star investor Cathie Wood and her firm ARK Invest have been buying stock during the dip? Most investors become troubled when the shares they own are trading at a lower price. Wood seems to have a different view, so you probably would not want to miss this. Cathie Wood's trading has certainly been timely, buying back shares when the stock dipped and selling some off after it rose higher. Wood bought another 66,190 Tesla shares around mid-October on top of the over 132,000 she bought earlier that month. ARK Invest's first purchase in October was made after Tesla reported a miss in deliveries in early October, when Tesla announced its delivery and production numbers through a press release. Wood's latest buy came after the stock fell following Tesla's Q3 report. Moreover, Wood's ARK Invest loaded up on Tesla shares in its Innovation Next Generation Internet and Autonomous Technology and Robots ETFs several days ago. The company's three funds saw a buying opportunity in the automaker's recent slump on Wall Street. ARK's Innovation ETF bought 27,594 shares in the second week of November, while the Next Gen Internet and Autonomous Tech and Robots ETFs gained 2,909 shares and 9,173 shares respectively. Get extra $10 cash. Open an account and deposit any amount on Moomoo. It's a limited bonus for celebrating Moomoo's 10th anniversary. Check the link below. Moomoo is a great platform to trade stocks with many unique, easy-to-use tools. I think a lot of you guys will find it really helpful, especially if you want to be more hands-on with your investments. For example, find out the right time to buy and sell stocks. Link in the description below. Both new and old investors have the common goal of taking full advantage of the stock market and investing with confidence. Growth investors build their portfolios around companies that are financially strong and have a bright future. There are several probable reasons for Wood to keep buying up shares during the dip. Well, for one, Tesla has incredible growth. Over the years, EV maker Tesla has evolved into a dynamic technology innovator. It has transformed the EV space much the same way Amazon changed the retail landscape and Netflix revolutionized entertainment. Tesla is the market leader in battery-powered electric car sales in the United States with roughly 70% market share. The company's flagship Model 3 is the best-selling EV model in the United States. Tesla, which has managed to garner the reputation of a gold standard over the years, is now a far bigger entity than what it started since its IPO in 2010, with its market cap crossing $1 trillion for the first time in October 2021. The EV King's market capitalization is more than the combined value of legacy automakers including Toyota, Volkswagen, Daimler, General Motors, and Ford. Tesla is a Zacks Rank 3 hold stock with a growth style score of A and VGM score of A. Earnings are expected to grow 79.2% year over year for the current fiscal year, with sales growth of 54.2%. 8 analysts revised their earnings estimate upwards in the last 60 days for fiscal 2022. The Zacks consensus estimate has increased from 6 cents to $4.05 per share. Tesla boasts an average earnings surprise of 26.4%. On a historic basis, Tesla has generated cash flow growth of 95.7% and is expected to report a cash flow expansion of 177% this year. Experts believe that Tesla stock should be on investors' shortlist because of its impressive growth fundamentals, good Zacks rank, and strong growth and VGM style scores. Tesla also boasts great demand for its vehicles despite price hikes. Tesla has been raising prices, but that hasn't seemed to dent demand for its electric cars. Despite the firm facing higher costs, profits at Elon Musk's electric car company soared to $3.3 billion, £2.5 billion in the first 3 months of the year, as customers prove willing to pay more. The firm's deliveries were up 68% and would have been higher if not for supply chain shortages, the firm said. Its Shanghai factory was also recently forced to shut down due to COVID restrictions. Tesla recently had a sudden drop in wait times for deliveries on new orders on some of its electric vehicle models. Because of this, others are implying the demand is falling off, but it appears that there's more to it. In recent weeks, industry watchers have noted that Tesla's delivery wait times have dropped significantly. Some models that Tesla was quoting up to 6 months for delivery just recently are now listed as available in weeks. Sources told Electrek that Tesla is not experiencing any demand issues, but there are discrepancies between its order book and production allocations for certain versions of its vehicles that are resulting in some openings, especially at the end of the quarter, for faster deliveries. Due to Tesla's direct sale business model, the company is responsible for its vehicles until they are in the hands of the customers. The inventory doesn't go through a car dealership, and therefore, it's up to Tesla to keep inventory low and match production to orders. Depending on the demand for certain models and production capacity per model, there can be a discrepancy that creates volatility in wait times. In fact, Tesla recently even stopped taking new orders on some models to address its long backlog. Pierre Ferragu of New Street Research, a Wall Street analyst covering Tesla, sent a note to clients this week to warn them not to read the wait times dropping as demand dropping. Do not read a sudden drop in wait times too fast. Even with orders steadily growing, irregular increases in production capacity mean wait times will remain volatile. Our analysis clearly suggests orders are re-accelerating this quarter despite the drop in indicative wait times. Another reason for Wood to keep buying Tesla shares amidst the dip is because Tesla has plans to increase battery production, which bids good to the company and therefore its stocks. According to an August article from Nikkei, a Japanese media company, Panasonic is set to increase EV battery production for Tesla by 10%. Panasonic Holdings aims to boost production of the electric vehicle batteries it supplies to Tesla by about 10% by 2024. The Japanese company announced in July that it will also build its second EV battery plant in the US in Kansas, but the factory is not expected to be operating until 2024 at the earliest. Panasonic already makes batteries for Tesla at its factory in Osaka, where it has many engineers. The company plans to raise the production efficiency of its US plants to reach the level of our domestic factories by transferring know-how, said an executive. Also, it came to light in mid-September that Tesla is assessing the feasibility of building a battery-grade lithium hydroxide refining facility on the Gulf Coast of Texas to support its production of electric vehicle batteries. In a letter to the Texas Comptroller's office, the carmaker said it is looking to build the facility, which the firm touted as the first of its kind in North America, to process raw ore material into a usable state for battery production, reported Reuters. Lithium hydroxide, a key component used in EV batteries, is expected to be then shipped to various Tesla battery manufacturing factories through trucks and rail. It can be noted that Tesla CEO Elon Musk earlier mentioned that the company could directly enter the mining and refining industry at scale as prices surge for lithium. Subject to approval, the company plans to start construction on the lithium plant in the fourth quarter of 2022, with commercial production scheduled by the end of 2024. Tesla's new facility will use innovative processes that will consume less hazardous reagents and create usable byproducts compared to the conventional process, according to Bloomberg News. Tesla could become the first in the auto sector to make a direct investment in lithium refining as automakers look to secure the supply of lithium, prices of which have increased this year due to growing demand from the sector. Today, Tesla manufactures batteries for its EVs and energy storage products at its Gigafactory Nevada, which it operates with partner Panasonic. The company also has plans to produce batteries at its new Gigafactory Texas, which is located just outside the Austin city limits. Another strong reason for investors like Wood to invest in Tesla is that the EV company's profitability is strong. According to a Nikkei article published in early November, Tesla earned 8 times as much profit per vehicle as Toyota Motor in the July to September quarter, despite being outsold more than 7-to-1, a Nikkei analysis shows, putting the American electric vehicle maker ahead in quarterly net profit for the first time since going public in 2010. Tesla reported a $3.29 billion net profit in that quarter. Toyota earned 432.2 billion yen, the equivalent of 3.15 billion based on the average exchange rate for the period of 138 yen to the dollar. The leading electric car maker said it made 3.3 billion in the third quarter, up from 1.6 billion in the same period a year earlier, and nearly matching the record profit it reported in the first 3 months of the year. It reported revenue of $21.5 billion, up from $13.8 billion. In his trademark promotional style, Tesla CEO Elon Musk said that Tesla could become the world's most valuable company by far, surpassing Apple and Saudi Aramco. Subscribe to this channel for more Tesla stock content.